Good afternoon, everybody. Welcome back to the Opportunistic Trader. We're now joined by Mark Fisher. Mark has been joining us regularly to talk about the markets, his expertise in the energy markets, macro markets, a lot of great thoughts. How's it going today, Mark?
Mike, how are you?
Good. Getting ready for a big week. Elections tonight, Fed Thursday, and your markets, energy markets, just all over the place. I guess let's start there. Let's talk about nat gas. You joined us, I guess, like 3, 4 weeks ago, before nat gas was even at $3, and you were saying buy the $3 straddles. That was a good idea. And then even after we broke out from there, you were still looking for more upside. So where are we now? What caused the move, in your opinion, and where are we now, and where are we going?
Well, what caused the move doesn't really matter, but what I really think is that was the first time we've had a gap of 25 cents, 25 cents, where the markets held the gap, and that hasn't happened in, I don't even know, 2 years in natural gas. So with that being said, I think you got to buy the market on all dips. I think the market's entering a new phase. I think if you look at the natural gas stocks, they've also kind of broken out also. And, you know, for those of us who are more chicken, um, I think that, nat gas is, the energy stocks are probably, the nat gas energy stocks are probably a good buy. But I really think that nat gas is now really entering into a new phase, and I think that coming into this winter, we should see some good volatility in nat gas. I also think, by the way, that crude oil is painting a perfect storm because everyone's been long. You're seeing another puke drop today. I was long, got stopped out a couple of times, but I think that really, you know, between the Saudi thing, the elections. I mean, I wouldn't be surprised if you see a pretty healthy a pretty healthy bounce in crude. Right after the
Well, that's what
sorry.
we've had a few people, Larry's been saying that as well. And I think, that's a lot of people have been talking about that because we've had a swift move here from $77 down to 61.50. And a lot of people were talking about that, maybe election sort of bounce. But, back to nat gas real quick. Like you pointed out, the first thing you said, it's been we had a huge gap over the weekend, and then we've actually been pretty quiet. If you look at the day session from yesterday, day session, we were trading about 352 up to about 357. We've been in like a 7 cent range for 2 full days after a 25-cent gap. So that's pretty interesting. And, yesterday, right into the close, they were buying it.
But
Where can
I
that
think
thing go, you think? Can we get above $4 on that?
Yeah, I think we can above. I think above. Yeah, I think you. I think you don't really know because it really comes to how high does price have to get to choke off demand? Is it $4? Is it $5? Is it I don't know. I mean, obviously, Mr. Benedict's not going to rear his head and start trading that gas unless he sees a 5 print on the board. But that's But I really think that I think that it's going to be a volatile instrument as opposed to just watching paint dry every day.
Yeah, definitely volatility there. And so then, yeah, back to crude. So you mentioned before you've kind of taken a stab at the long side a few times. Is it something that you'd buy market on close here before API and DOE, thinking election stuff, or is it you think we get it below $60 and then it might be worth for a stab on the long side?
It's about time that price. I mean, I'm trying to buy it the last couple of days. I'll probably try to buy again today. I'll probably lose money again, but probably buying if you're a little bit of chicken, buying at the money calls expiring next week is probably where I probably end up.
Yeah.
Yeah.
What about let's take a look at equity markets.
The
We've
only,
been
the only other thing I think that's a little asymmetrical, by the way, are the grain markets. The grain markets are starting to put in. You can see like source of bottoms, and I think if anything's going to come out of the China stuff, it's going to be beneficial to the corn, soybean, and wheat.
Well, we
So
saw soybean have a big move that day when there was that kind of, I don't want to say fake, but Trump put out a kind of comment saying that, trade talks are going well, and soybean was the big mover in that ag market.
right. So I think that you'll see that again. I think you'll see a lot of that. So I think it'll be pretty busy here the next couple of weeks.
Yeah,
I also
absolutely.
think, I also don't think, by the way, if you look at the Nasdaq, I don't think the move in the Nasdaq is over with yet. I think we still got some. I think we still got some move to the downside there.
Well, that's my
I mean, the
question
market.
here. Based on where we are right now, it seems like we've had a bit of a move back. The election's back in the spotlight here. Yesterday Nasdaq underperformed, S&P outperformed. Any thoughts based on the election results or based on what expectation
Now,
is?
I just look at the Nasdaq chart and it's got a perfect 14-day moving average fake out, and unless we get above the 50-day, in the in Nasdaq. I think that you have to still sell rallies in the Nasdaq.
Okay, so on a pure
You know,
technical basis, you're looking
that's
still
it.
think that there's some work to do on the Nasdaq.
Yeah, and that's it.
And what about anything with fixed income? If you take a look, yields are back towards the high of the year. We're really the 10 years within 4 basis points of the high of the year, the 2 years at the high of the year. And remember, back in early September, that was what supposedly, I'm sorry, early October, that's what supposedly got everything off on the volatile, oh, yields are moving higher, so we got to sell equities. Is that something you're looking at with yields here?
I only look at the I look at the what I call a hard paper chart, which is a chart of the 10-year in the S&P and the 30 in the S&P. And if you do a chart of it, obviously we're above, the point for July. So, I'd be, if anything, I'd be short the S&P and the 10-year, or short the S&P and the bonds, because I think the correlation, when people used to, say, well, if the market goes down, the bonds are going to rally. That doesn't really happen anymore. But to some degree, if the market rallies, the bonds usually do still come off. So I think being short S&P, short T-notes, S&P, short bonds, you know, together as a pair, is probably a safer trade than just being short the S&P outright.
Yeah, that's an interesting one. And then, last thing before I let you run, Nat Gas, back to Nat Gas, the straddle for 22 days right here, is roughly 30 cents, which I think is pretty cheap given we just did 30 cents over the weekend.
Right.
Is there any trade there that you're looking at?
No, no. I think now you just got to buy dips.
Okay. All right, Mark, thanks. A lot of good information there. Buying dips on
All right.
Nat Gas, keeping a close eye on everything else.
And
Thinks technically maybe NASDAQ has some more on the downside.
yeah. All right. Everything good?
Yeah, that's it. So
Okay.
it'll be active. No, we have FOMC elections tonight, FOMC on Thursday. So a lot of activity. Thanks a lot for joining us. We'll talk to you a little later.
Say hello to your fearless leader for me.
All right.
Bye bye.